gaming and leisure group Phumelela has come out with its full-year results this morning, and here to unpack the numbers is the company's CEO, Rian Plessis, who's CEO of the company. Of course, thanks so much, Rian, for joining us this morning. Looking at the highlights of the numbers here, headline earnings per share up 5%, cash reserves sitting at 133 million rand. So slight increase in profits coming through there, but considering the pressure consumers are under, one would assume that you've got to be satisfied with this kind of numbers. Not too bad if you're looking at these headline figures.
Yes, we are. We're very pleased. I think if you unpack those numbers, it was with the background of a really a worldwide recession. You should also bear in mind that in the comparative period in the previous year, we still had the benefits of the Racing UK contract, which was our biggest profit generator offshore, and we had lost that. Despite that, our profits on the international operations were up 43%. And if you look at that in constant currencies, it was actually up 55%.
In fact, I mean, international operations now accounting for 39% of your profit, where it did contribute 28%. So what's plugging the hole where you do say that, you know, that Racing UK rights agreement has been pulled?
We've managed to secure additional countries. Australia takes more of our racing now. Italy takes more. Turkey takes more. France has started taking. And then with effect from the 1st of June, so we only had 2 months benefit of that, the bookmakers in the UK, of which there are 10,000, are taking our picture at almost double the price.
Yeah.
So
we're also looking at some diversification coming through, because you're looking at, you know, the deal with satellite information services, and that for license rights to, you know, to South African racing data, and then television broadcasting rights as well. So run us through that strategy and how you see that coming into the revenue picture and contributing to the bottom line moving forward.
Yes, SIS distributes our picture to the 10,000 bookmakers in the UK. We have the benefit of starting to race earlier than the UK, particularly in the European winter, where there's a 2-hour time difference with the UK. So when their shops open, there's no other competing UK product for punters to bet on. So they start displaying South African racing in those 10,000 bookmaker shops. It's actually a very, very good advertisement for South Africa. You can imagine in dreary and cold January or February in the UK, if you walk into a betting shop and you have a look and you see sunny South Africa and colourful horses running, you know, it's a temptation to jump on the plane and come down here.
Absolutely. Well, we'll be taking a look at the tourism sector a little later on in the show, so we'll be unpacking just, you know, what kind of potential, you know, this opens up for the industry, where we know that South Africa as a sporting destination has been widely advertised ever since, you know, the World Cup and successful hosting thereof. Let's bring it back home, though. In terms of your local operations, what kind of action are we seeing on home ground, which stands, it seems, in contrast to what you're seeing offshore?
Look, yes, our local operations were down 18%, which is very disappointing. The major, all aspects of the local operation did well, with the exception of our agents, and really that is work in progress for us. We're still labouring very hard under the open bet, which bookmakers are offering.
Take us through that, and you know, what the actual pressure point is coming through from OpenBet.
It's effectively offering that bookmakers will offer, we will pay whatever the tote pays, but they don't place the bet with the tote. And the tote bears a significant part of the cost of funding the sport of horse racing in South Africa. So it's something that we are addressing with the bookmakers and with government. There's a Gambling Review Commission that is underway at the moment, and we've made our submissions to the Gambling Review Commission, and we're confident that our case will be heard.
A case to be heard, when are you expecting some kind of outcome from that?
The public hearings, I believe, are scheduled for the 26th and the 28th of October, and we do expect that the Gambling Review Commission would then take a stance shortly
Well, we wait
that.
for bated breath for that to come through. In the meantime, your dividend has been increased back to 43 cents per share. That leaves you at a dividend yield of 6%. Run us through the rationale there, because, you know, some would say it's still within a very trying circumstance. So isn't this being a little bit over-exuberant given the current economic conditions?
Well, we believe that dividends are very important to our shareholders, and in recessionary conditions, our board has taken the view that for as long as we generate significant cash, we will do our utmost to maintain the dividend. Obviously, if and when we move out of recession and our profits start growing a bit more, then we would return to a normal dividend cover. But right now, you can see, you know, we're sitting on 133 million rands worth of cash. The cash is generated every year. And yes, it's trying times, but we've got the money, and our shareholders deserve earning the dividend.
Like you say, 133 million rand sitting in cash reserves. How low can you afford to take that?
Well, you will notice that we announced that we're also buying out Betting World. So that's going to cost us all of about 38 million. So, and also, I think this company is cash generative, and therefore it can handle a modest amount of debt as well.
Yeah,
so
because at the moment you're sitting ungeared to a large extent. So, you know, where you're sitting on this pile of cash and, you know, the principle of use it or lose it applies. Take us through possible acquisitions. You've touched on one. What's your plan on that acquisitive route moving forward?
Well, we're looking at numerous options, and Betting World we can talk about already, but the other ones I'd prefer when they're a bit closer to finality.
Well, we wait for those announcements. Rian, thanks so much for your time this morning. Of course, Rian.